Senator Howe, this is April. The video is streaming, so we can start anytime you're ready to start.
Oh, all right. Good. I'd like to call the Senate Finance and Appropriations Committee meeting to order. Once again, it's atypical since we can't even see each other. Hopefully by next month, which will also be virtual, we will have the ability, Senate technology will have gotten us at a state where we can view each other as...
Morning, he's joining the call.
The video is streaming, so we can start anytime you're ready to start. Oh, all right. Good.
April, I thought we had started, and I'm getting
what you heard was a lag, and that's now turned off so that you can't hear it. But
okay.
The streaming is about 15 to 30 seconds behind. So, just for your knowledge.
And Madam Chairman, if you would advise everyone who is not talking to put their phone on mute, that'll also help us with the feedback.
Okay. Did everyone hear that? Please put your phone on mute if you're not talking. Okay. I do want to call the meeting to order, and April is going to call the roll.
Thank you, Madam Chair. Senator Saslaw.
Hello.
Saslaw is here.
Senator Normant.
I am also here.
Senator Hanger.
Here.
Senator Lucas.
Here.
Senator Newman.
Here.
Senator Ruff.
Here.
Senator Vogel. Senator Barker. Senator Edwards.
Here.
Senator Deeds. Senator Locke.
Here.
Senator Peterson.
Here.
Senator Marsden.
Here.
Senator Eben. Senator McQuillan.
Here.
You have a quorum, Madam Chair.
Good, thank you.
Here.
I hope that everyone is well and your families are also. We've been going through a really difficult time. As you know, everybody's life is totally disrupted. Kids aren't in school. Parents are either working at home or not working at all. Some people are out risking getting the COVID virus to help the rest of us. So it has been very, very unexpected and difficult. Among those areas that have been most impacted are some of our state agencies. And today's meeting will be discussing some of those impacts. We'll start with Secretary Lane, who will do the usual revenue forecast, except he will not be able to be as specific as usual. And then he's going to give us an outline of the federal funding that's coming in. Then we're going to hear from Dr. Oliver, our state health commissioner, talking about the impact on the Department of Health. And finally, we will hear from the commissioner of the Employment Commission, Ellen Marie Hess, who will talk about the impacts they've been having in that agency. So with that, let me turn it over to Secretary Lane.
Oh, good morning, Madam Chair and members of the committee. Thank you for having me here today. I happened to hear the discussion before this meeting about a song. It's called In the Year 2525. It's by Zager and Evans. So that's telling my age also, but it was a pretty good song. So what I thought I would do today, obviously you've seen the headlines. We were down 26% for the month, about $700 million. But I believe that is still well within our projections of $1 billion loss for the fourth quarter. While that's not good, it is pretty much right where we thought we would be, and I want to go through how I get to that conclusion. So we'll start and talk about the national and state economic indicators. And while I normally go through those very quickly, I'm going to spend a few minutes on those because they're going to be key to our forecasting going further. One of the things that I want to spend a little more time today is about how this forecast is going to be built and what's going to go into it. And national and state economic indicators, which we're starting to get a little better handle on, are going to be key to how we do that. Then we'll talk about, obviously, the details of the April year-to-date revenue collections, some next steps, and, of course, I'll talk a little bit about federal stimulus funding, the actions we've taken with the monies we've received to date. And as I said, I want to spend a few minutes also on forecasting. But before I do that, I know Madam Chair, you mentioned this will be an unusual presentation, and it is unusual in a couple reasons. Number one, it's one of the first that I've done in front of you where I wasn't talking about how good our revenues were. And that's been what we've been doing for 2 years. So you should know a little bit about me and where I'm coming from as we go through this. I am a contrarian by nature. And in fact, as I mentioned, the last 2 years, I was up here mainly talking about how we should be cautious because this may not continue. While no one thought it would end this way, but our Deputy Secretary Joe Flores, when we would prepare for these meetings, the joke was how I was going to get up there and say all this excess revenue, we shouldn't be so glad about it. And that's not what we're going to be doing for the next year or two. In fact, it's going to be the other way, and you'll probably see me take a little more positive turn because I've learned as a contrarian that things always revert to the mean. It's just a matter of time. But if you go back and look at the history of economics, they always revert to the mean. So you need to understand where I'll be coming from as we go through this. You should also understand I'm an unabashed capitalist. I believe in the Virginians and the American economy. Now, before some of you get excited about that, I don't believe in the cowboy capitalism that's been going on the last 25 years. I'm more on the line of what de Tocqueville wrote in 1835 in Democracy in America, where capitalism is about the way to be free is to be able to earn your own living, but also comes with it the responsibility to take care of those in our society that can't take care of themselves. And I think what we've seen by this downturn, that our economy may have been good for some, but our underlying social fabric was pretty thin. And as the chairman mentioned as before we started this, it's been uneven, both in good times and bad times, and I think we need to keep that in mind as we go through here. So just a little bit about where I'm coming from so you can synthesize my comments as we go through this presentation. Now, I'm actually on slide 3 now, and this is the beginning of the national and state economic indicators. And again, I'll point out from the first bullet, this is the first monthly report where we have the effects of the COVID-19 outbreak. It's still not a full month because some of our revenues are actually 60 days, 60 days in arrears. But it still is giving us a pretty good indicator of where we are headed here. And of course, we're a product. What happens in Virginia is a product what happens at the national economy. So if you look at what's going on nationally, I'm sure you all saw the headlines. In the first quarter of this year, because of the impacts, they're expecting on a national basis annualized gross domestic product to fall by 4.8%. That's the first time in many months, many years, that's happened, and we are in effect in a recession because what we're anticipating is the second quarter or our final fiscal quarter, that is April through June, to be down as much as 37 to 40%. So that's going to be a pretty significant impact, at least in those 2 quarters as we go forward. And you've all seen the headlines. Unemployment has has risen significantly across the country with all the unemployment claims, both nationally and here in Virginia. On a national level, at the end of last month, we were at 14.7% unemployment. And on May 2nd, that rose to 15.7%. Over 30 million people nationwide have filed for unemployment in that. The good news is that seems to be ebbing in terms of still very high numbers, but we're reaching the end of that in terms of coming down on the other side as the unemployment claims continue to decrease, even though they're still at a fairly significant high number. So that is going to obviously impact the nation and Virginia in the next 2 quarters and beyond, depending on how quickly we come out of this. One of the things that I'm closely following, though, is one of the last points on this page, and that is consumer confidence. I believe consumer confidence is going to be the key to how we can predict how we come out of this. It is going to be the key to our future economic activity. Public confidence and whether they want to go back out to eat, whether they're going to go into an establishment, is going to be what's going to control the opening up of our economy. It's not going to be like it was during the Great Recession back 10 years or so ago. And that because that was by an extraneous event, by the bombing of the World Trade Center, by the planes flying into those. There was fear. Flying, we were able to quickly get over that. That's not going to be the case with this. We're going to have a slow come out of this, and it's going to be related to public confidence. And let me also point out that the stock market is not a good indicator of our actual economy, at least not in the short term. The financial markets are looking out into the future, 12 to 18 months. As you recall, last year, we had an inversion of the yield curve when the yields on short-term interest rates were higher than long-term. Historically, that has been an indicator of a recession. Well, I don't think anybody thought it was going to come this way with the pandemic, but that ended up being a pretty good indicator because here we are about a year later, 12 to 18 months out, and we are now in a recession. And if we believe that the stock market is an indicator of future, it's saying to us we can expect 12 to 18 months to be better in our economic activity. But I don't want to confuse that with what's happening today on Main Street, because on Main Street it's pretty tough, and you'll see that as we go through our numbers going forward. So just repeating to you what you probably read in the headlines about what's going on at the national level. Turning to slide 4, there are a couple of things that may help us come out of this. Our core inflation is very low, and it's going to remain low because the Federal Reserve has said they're going to keep interest rates near zero, and Chairman Powell Sunday night on 60 Minutes indicated that may last for 2 or 3 years. And they also said that the Fed was going to continue to use quantitative easing, meaning flooding our economy with money. And he said we had unlimited resources. Now, I understand there's going to be some impact to that in the future, but at least in the short term in helping this, we should not see the banking or financial crisis that was associated with the last recession and the Great Recession because of the flooding of our market with money by the Federal Reserve, and our core inflation interest rates are remaining low. And if you throw on top of that, energy prices are at an all-time low, meaning that some of that will be beneficial as we climb out of this, assuming we can open up the economy going forward. Now, I should also mention that fiscal policy by the federal authorities, Congress, has been helpful, and I'll get into this when you see our sales tax and our employment numbers, because of the amount of monies that have gone directly to individuals, either through direct payments or through unemployment or to businesses for the payroll protection program. That has helped keep businesses going, unlike the past recession and unlike the Great Recession. So there are some things that the federal government is doing that is completely different than past recessions, and we'll see if that makes a difference. It appears to so far. Now, when we turn to Virginia, we're experiencing pretty much the same thing. I estimate that our employment rate is somewhere around 10%. We've had 670,000 unemployment claims over the last 4 or 5 weeks related to closings as a result of the pandemic. As of May 9th, though, the last time this was reported, just like on the national level, our reporting numbers are coming down. Still high, but are coming down. So hopefully we're moving towards the bottom where a few months ago, or actually 6 or 7 weeks ago, we were still unknown and didn't know where this may end up on that. So again, I'll talk a little bit about more when we get into the actual numbers about that. And then, of course, one of the things I'll point out related to confidence in Virginia, our leading index, auto registrations are significantly down, particularly automobiles. And that has been a very, very good indicator of the strength of our economy at the nationwide and at the Virginia level. And a lot of that has stopped, and we'll see that. I'll report on that a little bit later, too. So I'm closely watching public confidence surveys, because that's going to be a key as we move forward, and particularly when we get to forecasting. So turning to page 5, we'll get right into the numbers here. As I mentioned, we were down approximately $700 million for the month. All of that was related to non-withholding in terms of the gross dollars of being down. But I'll point out here, with 10 months in the bank, we are still 1.4% up to last year. Now, the all-important fourth quarter for us, where we get about 30% of our revenues, is heavily dependent on non-withholding. And we'll get into that. But the good news is we are still positive going into the last 2 months. And that is another reason why I'm fairly comfortable that our projection of being down $1 billion still is going to hold true. But let's get into some of the specific details. Now, this is the withholding tax collections for the month, and they were up pretty close to forecast. But that was because we had 2 extra deposit days. If we didn't have those 2-day extra deposit days, I expect we would be down somewhere about 5 or 6%. But there are some things that give me some optimism that we're going to weather this better than we might have thought at least a month or 6 weeks ago. First of all, if you look at the nature of the Virginia economy, we are heavily dominated by federal government spending and employees, including defense spending and technology. And also, when you combine that with many of the manufacturing for food processing and the big stores that were open during the month of, during this, were considered essential and were open during this, that is going to help stabilize us more than might be otherwise thought. I went back and working with John Lehman, our economist, and looked at tracking payroll withholding starting in March and April and up to May 15th by week. And I divided it between those individuals or companies that had $1.5 million in payroll, $3 million in payroll annually, $30 million in payroll, and then those over $30 million. 91% of all the businesses that pay us in the Commonwealth, 91% of our people that give us payroll have less than $1.5 million in payroll annually. And that represents 17% of our total payroll. Contrasting that on the other end of the scale, those over $30 million in payroll represent only 1%, yet they are over 50% of the payroll that we collect here in the Commonwealth. In fact, if you take those individuals of $3 million or less, that represent about they represent about 95% of our total number of people that pay us payroll or businesses. They only represent 24% of our total, meaning that we are heavily skewed to the large retailers and the large employers in the Commonwealth. And the reason I mention retailers, because I don't know if you watch CNBC, but Walmart reported this morning not only that their earnings were good, but they added 200,000 people across the country in sales positions. Home Depot kept every one of their employees on and paid them whether they were working or not. So many of our large employers, like Newport News Shipbuilding, has remained open. The federal government has remained open in paying its employees. Same being with the heavily laden technology area of Northern Virginia and other parts, and some parts of Richmond and Hampton Roads. They're able to work from home. So yes, while we have seen the headlines showing that we've got these large unemployment numbers, when it comes down to who actually pays us, it is not indicative of how our monies flow. In fact, those employers, the worst week that an employer over 30 million has had, the worst week has been about 11%. It's averaged about 3% down. Now contrast that with the 91% that are less than 1.5 million. Their work week was 30% unemployed, and they've averaged 9% down. But they only represent about 17% of our total. So when we look at headlines and numbers, yes, it's terrible. These are restaurants. These are barbershops. These are Main Street entities that we need to help to get open. But in terms of our revenues, it is not nearly as impactful as the headlines say. So that's one of the reasons why I'm pretty comfortable that we're going to hold up. We're still going to lose. We're going to be down. These others are impacted, but not as much as the headlines might indicate. And I'll get to a projection as we go forward, but I wanted to give some more detail behind these withholding tax collections because it is dominated by large employers. And they have held up much, much better than the amount of on the other end of the scale. And I want to make sure, I don't want to diminish the importance of us helping getting these others back on their feet. Of course, they've been helped a little bit by the direct payments by the government and some of the other loan programs and unemployment, but still, I didn't want to diminish it, but I wanted to point out when we start projecting, it is not looking at the headline news. Now, turning to page 7, we'll get to really what I think is going to be the most exposure to us, and that's the not withholding tax collections. They were down $760 million for the month, which represents the entire amount of our loss for the month because we had some ups and downs in some other areas. But what I want to call you attention to is the last 3, April, May, and June. And if you look on your chart on page 7, you'll see 3 asterisks. 3 asterisks. One's above the blue line in April. One's above or equal to the yellow line in May. And one is below, about halfway in the yellow line in June. April is actual receipts for the month. May and June are the yellow are estimated receipts. Those 3 asterisks represent what we were projecting had we not moved the tax filing date from May 1 to June 1. But I want to put in here, we had already reduced our projections by over $500 million from last year because of the impact from the Tax Cuts and Jobs Act. So in April, we were expecting $930 million and only received $470. But that's because we moved the May 1st deadline. We got a lot of things on April 15th for federal taxes that have been moved, and we've moved our state now to June 1st, so we won't collect those taxes that we would have normally gotten in April until we get into late May and June. In fact, I know that's going to happen because we only processed 260,000 tax returns in April versus 540,000 last year. So this is not a point where somebody's paid us and we got less. They haven't paid us yet. And remember, we had an upward bias. So going forward, we expect to get these monies in May and June. Now, will we get them all? I don't know. But I do expect that we're going to get quite a bit of them because it relates to prior activity. So in moving forward here, I still think there's a little bit upward bias going out there. Now, I'm talking from the state's perspective. We've all determined before we couldn't move our date past June 30th because of the fiscal responsibilities of balancing our budget and our constitutional issues. But But having stated that, these monies should come in, and we're expecting to get most of them in, although we don't have to get all of them in to still meet our projections. But I just wanted to point out that this is going to be determined of whether or not we stay within that projection. Now, if you go to page 8, this is the slide I was telling you about before, talking about the upward bias. If you remember, we were talking about 2013 and 2014 and wondering whether or not we were going to have the same impacts. Of course, this year, and remember 13 was we had a major tax change, and 14 it didn't repeat itself. Obviously, by moving the tax date, we've moved that down to, significantly in April. The question is, how much are we going to pop back up? And that will determine whether or not we make this within our $1 billion projection as we go forward. But all indications as of right now are that we are on that track. Now, that sort of, the one other thing to talk about with individuals is income tax refunds. Again, here, you would expect most people that were due a refund to file as quickly as possible. And yet, we filed 490,000 refunds this year versus 730,000 last year. Now, the question is, have they just not filed because they're waiting to wait till June 1st? Or have they simply not going to have the refunds they had last year? Because remember, we had a lot of refunds from the previous year until we changed the taxes. So again, this will be something we'll monitor, but talking with the tax department, again, it looks like most people that were due refunds have tried to get them in. And I know I had a lot of conversations with our CPA friends about this and encourage them to file anybody that's due a refund to get that in as quickly as possible, because you don't have to file a federal return and before you file your Virginia return. You can always file your Virginia return regardless of when you file your federal return. And that's in current state law as we move forward. So that is the story on individual income tax. It's really going to come down to what happens in non-withholding over the next quarter. Now, we do have some other good data now in sales tax collections as we move forward here. They were only slightly down for the month, just slightly down, and we were expecting to have a more significant drop-off. And our calendar here is pretty close. And so we are still running at 7.4% for the year. So we're still, just like on our withholding, we're pretty close to our budget for the year with 2 months to go. And there were a couple things that helped us here, some trends that look like they're going to continue. First of all, online sales were the majority of this particular month's revenue. And if you watch again this morning, online sales at Walmart were up 74%. So I do believe that is a trend that's going to continue. We may come at the cost of sticks and bricks retailers, but this is something that's going to continue in the future, particularly with people staying at home, getting used to buying online. I think that's going to continue. But also, we did get people weren't going to restaurants, but they were going to grocery stores. So food purchases were up significantly in grocery stores and big box retailers like Costco, Walmart, and the others that sell food. They were up substantially, and ABC sales taxes were up substantially, not just in our stores, but allowing restaurants to sell off-site. So those help bevy, again, a fairly good month for sales tax. The question is, will this continue? I expect it to go down some, but a lot of the underlying trends remain strong, particularly because people are getting unemployment benefits, and it looks like that's going to last pretty much through the rest of our fiscal year in there. And the fact that we've opened up the economy, at least starting to, many have been able to return to work, and we'll get better data as we go forward. So again, I think we're closer to a bottom than we are where we were 5 or 6 weeks ago, and particularly a whole lot better in how to read what's going to happen with our economy as we go through the next year and a reforecast. Corporate income tax collections are much the same. They're down, but we know we have a drop in actual payers. So we won't know till we get to the June 1st and June 15th for those estimated payments as to see where we end up. Not a significant portion of our revenues, but still the fact that we know that people have not paid us as of yet. Now, on page 12, recordation taxes, again, was another stellar month. And this goes back to interest rates being low. Most of this, almost 80%, was due to refinancings. And what we're seeing now is people are not only refinancing because of getting a lower interest rate, some are pulling money out of their homes. And I'm sure that's in response to making sure they have liquidity to get through this pandemic till we get to the other side of it totally going forward. Also, our insurance collections were good, but I want to give a note of caution here. If you've been watching TV, you've seen Geico and State Farm talk about rebating premiums to their customers, and I expect that's going to happen. These simply are the amount of premiums times 2.25%. And if that goes down, I expect these will go down somewhat in the future as insurance companies rebate going forward. But if you turn to page 13, when you add all this up, if we were to make our budget, which I don't believe we are, but if we were to make our budget, we would have to have economic activity up 9.3% over last year. That is not going to happen. And a lot of that has to do with non-withholding. If you look up above, we'd only have to increase 2% when you take non-withholding out of it. So it's all going to come down to that. But as I said, I believe we're going to end up about $1 billion down. And if you turn to slide 14, this is more indicative of, I think, what's going to happen. We're going to not be totally getting everything in non-withholding, and we are going to see a loss in sales and corporate income taxes. At least we're projecting to do so. But I wanted to point out a little bit here about how we could use this in our forecast. Remember about 6 weeks ago, or at the end of the legislative session, this is when this all hit. And we had just passed the budget, and we knew the revenues were not going to be accurate. However, we didn't know exactly what they were going to be. And I'll explain that as between the difference between risk and uncertainty. Risk are things that you have modeling points and you can value. There's probabilities. Uncertainty means you can't even determine how it's going to be impacted. That's where we were 6 weeks ago, 6 or 7 weeks ago. And the only thing you can do in an uncertain environment is to assume the absolute worst case, at least if you're fiscal responsible. But we chose to not do that. We took actions in the current year to free up reserves, to cut discretionary spending, to stop capital spending, to build our cash. And we unallot a lot of things in the new budget, meaning we can't spend on them until we get to a forecast. And I believe that is the appropriate way. We took the right action. And here's why. And I'll use an example of one of our neighboring states. One of our neighboring states, Maryland, 6 weeks ago came out and said they were going to lose $2.8 billion in the fourth quarter. And I think they were looking at those headlines of unemployment that we were seeing before analyzing them. Well, now they've revised that and said, nope, looks like it's going to be closer to $1 billion since they've seen results. So they've come in line a lot more closer to us. Same thing, University of Virginia put out an estimate just a few weeks ago, looking at some of the data and said, nope, we think we're going to be off about $600 to $1 billion, $600 million to $1 billion in the fourth quarter. So we're starting to see, as we get better data points, that we're starting to be able to forecast better. Now, I know that there are some out there that for ideological or political reasons would like to be pessimistic or overly optimistic, depending on what your view is. But I like to base it on trends and data. And I think we now know that we're getting close to how deep this is going to be. We surely don't know how long it is, but we're going to have another 60 days before we reforecast to see how we're going to open up. And we're also going to know more about federal action. And it's not necessarily federal action giving money to the states, but if they continue to give money to consumers and businesses, which the Federal Reserve has said and Congress has said they're going to do, that's going to help us to come out of this better. Now, we'd love to get more money for the states. We can talk about whether that's a bailout or not. I will say this. I don't think any member of Congress has any authority to say that it would be unmanaged by the states. The last time I looked at it, Virginia was AAA rated and the federal government was not. We had a balanced budget. They did not. So I don't find their talking about this political rhetoric, it's a bailout, doesn't hold much water with me. But having said that, what's most important is we keep giving money to businesses and our employers going forward, and that I believe will help cushion us and get us back to more collection. And I'll talk a little bit about that as we move forward. Couple things. No one is under the impression that the new normal is going to be anything like the old normal. Teleworking, I believe, is here to stay, and that's going to impact the real estate market fairly significantly, I believe. And it should affect the state government. We have been working very well from home. I'm sure others will take a little different view, but whether or not we need this footprint, our companies are going to make those decisions going forward. Online shopping is going to continue. There are many retailers that are not going to come back from this. They just are not. Transit and ride sharing are going to be changed. There was an article in the paper the other day about Uber and Lyft. People don't want to get in the cars with others. In fact, that may help single car sales go up in the future because more people are determining that they want to be by themselves when they ride. I'm not saying that's a good policy or not. I'm just saying what may happen as a result of this. And you're also going to see the rent of an apartment or a home versus the buying depending on multifamily versus single-family homes or urban versus suburban living. And if you look at the home sales and the home new applications, they've shifted from multifamily now to suburban home building, single-family homes in there. So we're going to see some shifts as we go forward. Not saying it's going to be what it was before, but at least we're going to have some data. So in wrapping up our next steps in terms of this year, we'll be looking closely at obviously the revenues and also our cash balances. We monitor our cash balances every week. Right now we have about $13.5 billion in cash. About $3.5 billion of that, $4.5 billion of that is unrestricted cash balances. The other is restricted, but it is still float. And then that hasn't changed substantially to us over the last 60 days. So we monitor those. That looks like we're in pretty good shape there. We do have the ability to access the Federal Reserve's municipal lending facility. I don't think we're going to need to do that. It's only a lender of last resort, but we did put it in the budget and you guys passed it. If we needed to do that, for instance, to free up reserves quicker, we have that at our option. So we'll continue to monitor those and these significant tax payments. I want to give one other word of caution, and that is the accelerated sales taxes as we go forward. We have about $337 million that is due at the end of June that is from companies that have over $10 million in sales. They pay us back based on last June's estimate, 90% of that. There's about 2,350 of those companies in the Commonwealth. I expect many of them, or some of them, I shouldn't say many, could be many, to ask for a waiver variance. Their sales are down this year. So we're going to have to make sure we understand what the impacts of that is for the month of June. It's just a timing difference, but it could affect the end of June versus the first part of July, so we're monitoring that. A couple of other quick things. Our lottery proceeds continue to suffer. Our proceeds were down 7% for the month. $7 million for the month. That's over $40 million year to date. That's a little more than we projected. I know the DPB is working with them on an updated projection as we go forward. And then I mentioned I'll have a report next time. I do it on more detailed on transportation revenues, but motor vehicle sales tax and use taxes were down $37 million, or almost 42% for the month. And if you go look at it, some trucks are still selling, but most automobiles have completely stopped. So hopefully there'll be pent-up demand as we go forward. So that is a quick not quick, but a summary of where we are with our monthly revenues. I'll get a little bit about the federal stimulus funds. I'm now on page 15. First, let me state.
Aubrey,
yes, ma'am. Yes.
Well, I wonder if we could take questions
Oh, sure.
for what you've already done and then
Sure.
go into the second part.
That's fine.
Does
I'm
anybody
happy to.
have? Does anyone have a question? No, it sounds like there aren't any. You were very thorough.
Aubrey, that was a really nice job.
Yeah.
Well, we're going to have a lot of questions, and if we get to the end, if you think of one, I'm sure happy to go through those, because some of the federal funds may indicate where we are going forward. So, Madam Chair, when we get to the end, if there's questions on either this or the presentation, I'm happy to do that as we go through this also. But thank you for asking. If you look at our federal stimulus funds, our state action is dictated by the federal action. And what I mean by that is there's been a lot of activity at the federal level in terms of making announcements, but not so much as giving guidance. And Deputy Secretary Joe Flores and Deputy Secretary June Jennings have been working hard on this and trying to keep up with it. But there's a whole lot of publicity out there, yet we don't get a lot of guidance. Let me give you just a quick example. And the most significant of this is the Coronavirus Relief Fund. That's what most people want to talk about. We got the final installment on April 24th of 2020, obviously this year. We received guidance on April 22nd, even though this was announced at the early part of April. On May 4th, we got additional guidance through frequently asked questions. On May 7th, we issued guidance to our agencies asking for requests that were due yesterday. And by the way, by all preliminary numbers, it looks like we got significantly more requests than we do monies, but that doesn't surprise me. Also on May 12th, we got a communication out to the localities asking them to respond by the 22nd with a certification so we could disperse funds to them on June the 1st. My point is that we are moving as quickly as we're getting guidance from the federal government. And I should point out, we've been working, not their approval, because I don't want to assume that they're doing something you don't know, but your staff and House Appropriations, we've been working collaboratively, working through this to make sure we're all informed as we move forward here. So to date, there have been 4 separate stimulus bills, with one that is now being contemplated, the HEROES Act, another $3 trillion. I don't think it'll be approved in that particular manner, but there is another one out there. But the one that is really concerning to me, or I'd like to get more information on, is the 4th stimulus package that was passed included $25 billion directly for testing, $11 billion coming directly to the states. We have called and asked. We have still received no guidance and don't even know what our allocation is going to be from this. So that would be very helpful to know so we could free up some of the other numbers or grants that we've gotten to do testing. But in the interim, before we do that, we've obviously got to move forward. Now, to date, we've received approximately $6.1 billion flowing through these grants, or I shouldn't say received. We've been acknowledged that we're going to receive. Some of it has come in. A lot of it goes directly to agencies. Part of these programs were designed to use existing funding streams, and they push monies through, like to health and to public safety and to others, education directly through. And to varying degrees, we have some say over it. And every one of those, Joe and his team, DPB, June, they've been working to identify any one that there's discretion over so that we can get a hold of it and work with the governor's office and keep you informed of what's going on. But a large part of these, there's no discretion. They go right to the agencies through current programs as we go forward. Now, the biggest part that we do have discretion over is the Coronavirus Relief Fund, or the CARES Act. $3.3 billion came directly to the state. $1.8 billion was allocated for state purposes and $1.5 for the state to help local governments. Now, let me point out in that there is no requirement for that $1.5 billion to be given directly to localities. Now, we've chosen to do that working with your teams and working with your staff, not only your staffs, but you, because we know some of these localities have direct inputs, but there is no requirement. It was given for us to help the localities, not mandated to say, give it to them directly. Now, one locality was able to get their funds directly, and that was Fairfax, because the law was that any county or locality that had over 500,000 in population could access these funds directly. Fairfax did so and received approximately $200 million. And I should point out that the funds allocated for counties also include the towns within their borders. So they are responsible for getting those monies to the towns, just such as the Commonwealth would be if we gave direct monies, which we did, to the localities going forward. Now, as I mentioned, there's a lot of uncertainty about how this money will ultimately be used because we're trying to find out what the guidelines are, and there are conflicting guidelines from the Office of Management and Budget and Treasury. We sometimes ask the same question and get two different answers. But nonetheless, we're thankful that we do have the monies, and we're working through those requests. Now, over and above the $6.1 billion is approximately $21 billion have been received by individuals and businesses in the Commonwealth by the Paycheck Protection Program, approximately $14 billion, and the Municipal Liquidity Facility funding at the Federal Reserve, approximately $7 billion. So there's $21 billion of money that we don't have any control over, but are still flowing to businesses and localities in the Commonwealth. And again, that I think goes back to talk about some of the underlying basis for some of our numbers that we talked about earlier here. Now, what I've done on the next few pages is just give you a listing of all the different revenue streams, some 60 of them and climbing, I think Joe will say climbing, as we go through here, of where the monies are going. So pages 16, 18, 19, and 20 give you the details of where all this money is coming in and where there are discretionary funds that can be used. That is what we're identifying and making sure the policy team, working in conjunction with you guys, at least know what they are so that the agencies are just not making decisions with those monies that we're not aware of. Now, another point to make here is we also know there's monies going directly to localities and individuals and businesses that we're not aware of, we have no control over, but we want to make sure the monies we get coordinate with that. So another reason for this is making sure when we make decisions, we understand what other monies are going. For instance, if we decide to put a small business program, a grant program in place, I know Fairfax has already done that with the monies they've gotten. So we should take that into consideration. Not that we're not going to do more in Fairfax, but we should understand what they're doing with their monies. So that's another key for us with this, and I wanted you to see what we knew all the monies to be today. Now, these are the actions we've taken to date, and I've hit on them a little bit. We sent instructions out on May 7th, and yesterday we received all the agency requests, and there are hundreds of them in that request, billions of dollars that we'll go through over the next week or so, or couple weeks, to determine how those should be allocated. Again, on May 12th, we authorized $645 million in local allocations that are going to be distributed on June 1st to every county and city in the Commonwealth who sends back a certification. What we decided, working with you guys, your staff and members, is that these cities and counties did need to have some direct monies, but we had them sign a certification, the same certification the governor had to sign for us to get these monies, to say that they had to use them in compliance with the guidelines. And we also put in that certification, if they did not use them in compliance with the guidelines, the state had the right of offset against other state monies it could use to reimburse itself. Because if a locality uses the money incorrectly, it is the state that's on the hook for it. So that is the way we did this. We talked long and hard about whether or not we should do this through a reimbursement method, but was decided because some of these had significant impacts, we'd get money directly to them under a certification. The monies cannot be used for replacement of revenues. The monies have to be used by December 30th, and they have to be for a direct impact by the COVID virus. That's the three criteria, and of course there are a whole bunch of other frequently asked questions we gave them all the guidance on, but we expect that most will take advantage of that. There has been no decision made on any other direct allocations to localities. We figure that's probably going to be sometime in the summer. You guys more than likely will be in town because of a reforecast. We'll be mandated to do that because we will not make this year's budget. So I expect you guys will be here sometime in August. In that time frame, it's up to the governor when that's called. But we expect that we'll be able to communicate with you before any other distributions are made. I will say, though, that it is the governor's, obviously you gave him the right to allocate these funds in the budget, but we're trying to work collaboratively with you as we work through all this. To date, we've authorized $121 million for VDEM and basically the Department of Health for PPE and testing. And of that amount, $42.3 million was directly related to testing. The other parts were substantially for PP&E. Although I will mention today, I'm expecting to sign an authorization for approximately $58 million for contract tracing for the Department of Health to be able to begin to beef up their staff to be able to do contact tracing as we move forward. It's pretty clear as we open up, both from public health and from the economy, we're going to have a more robust testing and public health tracing so that when we have an outbreak, and hopefully we don't have a statewide one, but if we do, instead of quarantining the whole state, we can only quarantine and take care of the flashpoints. So I do expect to add to that total this afternoon. DPB has vetted it, and I wanted Joe to have one more look, Joe and June to have one more look at this before we actually sign this as we go forward. Other federal stimulus funds we've received, I know there's approximately $55 million that have come through the Department of Health, and you can see elections, VDACs, and requests from higher education. Many of those are for direct funds that have gone right to them. We still have to appropriate the money. And we have taken roughly $58 million during the budget session and the reconvened session. We put in roughly $58 million for general funds, not knowing we were going to get federal stimulus funds. Obviously, we're going to replace the federal stimulus funds and free up those monies in the general fund. So to date, we've taken about $878 million in action, plus I'll add to that another $58 million this afternoon. So we'll be up around $925 million of action with the CARES funding to date. And then the remaining slides in the presentation are simply the amount of monies that went to every locality. Every locality, that was a city and a county. The counties were, in the certification, said that they would treat the towns within their borders equitably. That's probably meaning giving them the share of the population they have as they move forward. We'll obviously look at that if we make any more distributions going forward. There were lots of other thoughts that this should be, instead of population, which the first one was done, it should be on the composite index. Others wanted it done on the number of COVID cases in the area. Some wanted special treatment given to college towns. All those may have been valid reasons, something we'll consider going forward, but we thought the first allocation to get something out relatively quickly would be under a certification and based on population, and then we'd go from there. So, Madam Chair, that is the presentation of what we have done to date on the CARES funding. There are some additional, as I said, programs in Congress that look like they're outstanding. I have continued, along with the governor and other members of our staff, to update our congressional delegation. Would love to have a little more flexibility with these monies. Would love to have them more long-lived past December 30th. But, of course, we'll do whatever, use them to the best we can, whatever the guidelines given by the federal authority. So with that, Madam Chair, I'll open it up for questions on this or anything else on the presentation.
Great, thank you. Are there questions?
This is Emmett. I have a question.
Yes, go ahead.
Okay. On the tracing, $58 million. Certainly I think y'all are doing a good job in managing most things, but from what I've read and what I understand, and gearing up with another 1,000 people, it doesn't seem to me that would be a good investment of $58 million if your other option would be to ramp up actual testing more and doing some other things to identify, and help with the problem areas. So have y'all, I know, that it's kind of a gamble with some of this you're doing and using federal dollars, but Are y'all very comfortable that that's going to amount to anything?
Well, let me be, you'll have a presentation from that a little bit later from the Department of Health. They go hand in hand, Senator Hanger. The testing, once we get those results, we've got to be able, if we're not going to do statewide quarantine, be able to isolate that. We are told, and we're going to sign, we work with the Department of Health. We've looked at using outside consultants. I think they're going to use them in some cases. These monies are on a monthly basis. They're going to be temporary employees, at least under the plan that I have seen and will be giving authorization for. It's about $7 to $8 million a month, as I recall, the amount that's needed. It gives us the ability to scale it down. Instead of hiring a third party, since there were already somewhere between 300 and a little bit more of current people deployed by the Department of Health that are tracers. It was felt that building out that infrastructure, the Department of Health thought that would be the most way impactful. That's what the governor has worked with the Secretary of Health on and has advocated. So I will say we've put in safeguards, though, that these are part-time and they are monthly numbers. They certainly understand that if they're used CARES funding, that stops on December 30th. And I will tell you, we will just be monitoring to determine the effectiveness of this. But you're right, I am not an expert on how this should be done. We are behind in our testing, although I think we're making good strides in getting that up based on the reports the governor's been giving and coming out of them increasing. I know from a test contact tracing is needed. It's a matter of execution. This does not include, to my knowledge, any of these mobile-based apps. This is the actual, Joe, is that correct? I don't think that does not, because I have very suspect of those for lots of different reasons. It is the current procedure that our health department does now with the contract tracers on staff, do the legwork that way. So, Senator Hanger, I think that's better a question answered by the Secretary. The Commissioner of Health is coming in here. I understand the plan, but it's going to come down to execution.
Okay, thank you.
Are there any other questions?
Janet, this is Steve Newman. May I ask a question,
yes,
please?
Of course.
Aubrey, first, thank you for what you're doing. Just a lot of confidence knowing that you and your team are there right now. So thank you for what you're doing and the update. Aubrey, as we look at the cases and the severity, the death rate in the nursing homes and those facilities is just extraordinary. Do you think that you have the latitude from the federal government or with state funds to go in and assist those nursing homes to make sure that there's proper segmentation, that there is extraordinary testing when that becomes more available, to make sure that that population, which has just been really, really hard hit and fearful that it could continue, that we really have the funds available to them to do that type of segmentation to keep this from rolling through more of our nursing homes?
Senator Newman, the answer is yes. That is certainly allowed use under the CARES funding, and the governor and the policy team, and I think everybody in the government understand that's got to be a priority. And I would expect a significant portion of our monies in the CARES Act would go to those homes and other long-term care facilities also. I will also mention, though, that there is, it's all going to be about priorities because we've got many more asking that. And then the testing, specifically to your question, Senator Newman, the prevalence point testing has already been approved for the nursing homes. So that testing is continuing. I know the National Guard has been involved in some of these issues around the state in that. But the answer is yes, from a financial perspective, we do have the resources, at least until December 30th, Senator Newman. After that, if it's going to require more, then it's going to require that us taking them from the general fund or other sources if there are no other additional funds. But I also point out, for instance, there are some things that will go into effect July 1st in our budget, like increases for some of the staff that are embedded in the budget. So that'll be something that's going to be helpful as of July the 1st that'll be coming on to help offset. And I should have mentioned that is another thing we're considering as we're looking at CARES monies, what's going to take effect on July 1st with the new budget, and particularly there's some salary increases that may be helping to offset that. But specifically, Senator Newman, the answer is yes. The federal government monies are certainly flexible enough for us to be used in nursing homes. I expect that will be the case at least until December 30th.
Thank you. Thank you, Madam Chair.
Sure. Is any other questions?
Madam Chair, Tommy Norman.
Yes, Senator Norman, go ahead.
Aubrey, I'd like to know at the front end of this pandemic situation, there was a suggestion that off-site medical facilities needed to be located and set up under the scope. How much money was spent on that?
To my knowledge, very little. And I won't say zero because I haven't seen all of the detailed reimbursements coming. But quickly as we got into that, it was determined that the hospitals in the region would have been the most significant person to head that effort up in regards of making sure, because they were going to be the primary. I know, Senator, you weighed in on that some. I will find out for you. I am not aware of any significant monies that have come through, but I can go look at all the different expenditures to make sure. Of course, that would at one time, there was a thought of having to spend hundreds of millions of dollars to do that. The governor ultimately did not do that, and I don't think that effort, for instance, the National Guard and some of those teams that were involved in it were billed not through us, but were billed directly to the federal government. So I don't know of any significant amounts coming to the state, but I'll verify that, Senator.
Is there any further questions? Well, Aubrey, I can't tell you how many times I've thanked my lucky stars that you're in this position at this time. It's so reassuring to have someone with your experience, intelligence, and dedication managing this for us. And your total availability to answer questions has been really, really helpful. So thank you so much.
Thank you, Madam Chair. I can't tell you how many times I've thought, why am I doing it? No, I'm just kidding. But anyway, thank you. Thank you. Thank you very much. I appreciate the working relationship we have with your staff and the members of the committee. And we'll keep you updated and work collaboratively with you as we go forward. Thank you.
Thank you. Next on our agenda is Dr. Oliver, our Commissioner of Health. And he is going to be giving us an update on the response of the Department of Health.
Madam Chair, thank you very much for giving me this opportunity to present to the committee. And thank you, members of the committee, for spending this time as I go through some remarks regarding our response to the COVID-19 pandemic. I will deal with a number of things. I'll do a little bit regarding the current status of the COVID-19 pandemic in Virginia, discuss testing, contact tracing, supporting long-term care facilities, and then a little brief remarks regarding federal stimulus funding. So you can go to the next slide.
Dr. Oliver, if it is all right with you, those are sort of separate topics. So if we could open it for questions at the end of each one of those bullets, that would be helpful.
Of course, Madam Chair.
Okay.
Can you go to slide 3?
Dr. Oliver, this is Mike Tweedy. Just to note that when I advance the slide, there's like a 45-second lag before it hits the live stream.
Okay.
So if you want to talk from a hard copy to keep going, I'll advance it as quickly as I can.
Excellent. Thank you. So this slide is represents some data on the current status of the pandemic in Virginia. And on this slide, the confirmed cases are presented by the date closest to the onset of illness. VDH generally receives data on cases several days after the person becomes sick. And this means that the most recent dates at the right-hand side of this graph become more complete over time, and that's why we gray it in. In days, subsequent days, those numbers will increase. The data are presented on onset date, and this provides us a much better glimpse of the true disease timing. The 7-day moving average is the yellow line that you see there, and makes the trend easier to note. On the next slide, we'll see some information regarding hospitalizations. The number of people hospitalized with a positive or pending test for COVID-19 represents the burden that the healthcare system is bearing from the disease, as well as their stock of personal protective equipment. The number of people hospitalized shows a slight increase over time, as you can see, while the number of patients in the ICU and on ventilators has remained relatively flat. The dark blue is the number of patients hospitalized. The sort of medium blue is the number of COVID-19 patients who are in the intensive care unit, and the lighter blue is the number of those COVID-19 patients who are on ventilators. On the far left-hand side of the graph, you'll see that the information on this hospitalization began around April 4th. That was when we began to get these data from hospitals around the Commonwealth. On the next slide, you'll see a graph that shows the percent of all testing encounters that were positive by the lab reporting date. This graph includes the what's called the PCR tests only. PCR, the tests that are the molecular tests that come from the nasal swabs. It's not the antibody test, which is the test that is done with blood samples. The 7-day moving average again gives us a easier glimpse at the trend of this data. That's the yellow line, and it shows a decrease since April 19th as testing has become more available. The next slide is just a title slide about testing, and I'll talk some more about the testing, and then we could stop for some questions around that. So on this slide, we have some information on laboratory testing capacity, which, as I mentioned, has increased weekly since the beginning of this pandemic in Virginia. We now have approximately close to 1,500 tests a day available through our state labs in collaboration with the labs at the University of Virginia, VCU, and Tech. We have contracts with 4 commercial labs that for the month of May that has provided us with an additional 35,000 kits that we can use. We know from our discussions with hospitals around Virginia that about 12 hospital systems are conducting tests, and they have a capacity of around 4,000 tests per day. The majority of tests in the Commonwealth are being performed by commercial labs, about 64% of tests. On days when we're approaching 10,000 tests, you'll get 6,400 of those tests will be from commercial labs. And there's approximately 20 commercial labs that with whom we're working with. I think let's go to the next slide. One of the important ways in which we're improving and increasing our testing is by doing what's called point prevalence surveys. That's when you test all individuals in a particular setting at a particular specific point in time. It's intended to identify both infected and non-infected individuals. We are prioritizing long-term care facilities, which comprises both nursing homes and assisted living facilities. And we're also, as a second priority, looking at state correctional facilities. We've been able to leverage a number of data points to identify 100 facilities that would most benefit from one of these point prevalence studies, and we're working with those facilities, our local health districts, and the Virginia National Guard to schedule testing events. To date, we have either conducted or about to or have scheduled 37 of these point prevalence surveys, and we're putting more on each day. The next slide looks at the availability of testing sites around the Commonwealth. This screenshot of our web page was taken a couple days ago. It says 190. We're now over 200 testing sites in the Commonwealth. And we continue to see more and more testing sites come online. About 40% of these testing sites are urgent care centers, 20% are hospitals, 10% are pharmacies, 10% are local health departments, and then there are federally qualified community health centers and free clinics that make up about another 20%. Testing for the virus that causes COVID-19 may cost the patient, depending on that patient's insurance status and on the particular testing site that they do. For that reason and other reasons, if we go to the next slide, our local health districts, with the support of the National Guard when needed, have paid a lot of attention to coordinating community events throughout the state to test people who have either are economically disadvantaged and can't access test sites for which they'd have to pay for testing, don't have primary care providers, or lack other means of achieving testing. And we've really made an effort to focus on vulnerable and underserved populations through these sites. We have ramped up our testing in these community events. This week, for example, there are some 20 community testing events that are scheduled with a focus on Latinx communities in Northern Virginia. I'll pause there to see if there's any questions regarding testing.
Janet, I have a question.
Yes, Asla.
We had set a goal of, or at least I was told, of 10,000 tests a day. I think we've only reached it once. Most days we're between 5,000 and 7,000. Will we ever get to where we're doing at least 10 a day?
Thank you, Senator. Yes, I believe we will be able to do that. As I said, we've ramped up the number of testing kits that we have available. We're doing more of these community testing events. We have these point prevalence surveys that are planned for long-term care facilities, both nursing homes and assisted living facilities. So there's a lot more testing that's coming up. The National Guard is fully occupied. They can do about 1,000 to 1,500 so each day, and we're planning involving contractors where necessary for some of these community events. And as I said, the majority of tests are being done by commercial testing companies, and we are increasing our contracts with them, and in particular looking for what's called turnkey labs. These are labs that, like one that we have a contract with called NACO, you contract with them, they come in, collect the specimen, send the specimen back to their lab, process the lab, and send you the results, so they can do the whole thing themselves.
But one day we'll have 7,000 or 8,000 or 9,000, and the next day we'll have 5,000, then 7,000, then 5,000. Why can't we consistently grow?
I'm saying that I believe we will consistently grow, although there will continue to be variation in the numbers. What we're shooting for is to have, on average, about 10,000 a day, and I believe we can do that.
If I could ask a question, where did that 10,000 a day number come from? Because I'm seeing that, for example, under Harvard, it would be more like 16,000 a day.
The number comes from an estimate of trying to approach about testing in the month of May, about 2% of the Commonwealth's population. We just sort of spread it out over the month. So the numbers have been going up, although there, as noted by the prior question, there has been some variability. But we'll be increasing the numbers. And to your point, madam, that goal, it will be a baseline, and we will seek to increase it more as we get more labs online.
John Edwards, I have a question, kind of a follow-up on that. And the question is, what is the optimum? Let's say of every 100,000 people, how many ought to be tested and how often? Is there an optimum? What are the experts saying, the people who study this, the research people? I've read that somebody said we think we have enough testing done. I'm questioning that, and I'm starting with the proposition: is there an optimum based on those that study these things? And what is that optimum? Like 10,000 a day for every day for how often? And how often should people be tested? So let's start, for example, hypothetically, the 100,000 people, and we have this coronavirus plague. How many people should be tested and how often? Is there kind of a standard, an optimum standard somewhere? Harvard or somebody else? I don't know who does this.
Right. So thank you, Senator Edwards. The World Health Organizations put out a parameter for this. That's the percent test positivity that we looked at a few slides back. What that is the number of positive tests, the proportion of positive tests out of the total tests that are given in a population. And they suggest that you are testing enough if that test positivity rate is around 10%. And that's one of the reasons why we've been using this as a metric of how well our testing is going. That test positivity rate has been decreasing, which is what we want to see, because we've been above 10%. We want to see it decrease toward that 10% mark or even lower. That indicates then that you are testing enough people that you have a significant number of people that you test who wind up being negative. In the beginning of the pandemic, you will recall that we had very few tests available. All the tests had to be sent to Atlanta to be processed. And because they were such a scarce amount of those tests, we limited them to only people who were who were symptomatic. And our test positivity rate, when you're testing people who come in with symptoms, you get a higher proportion of people who wind up testing positive. As we've got more tests available and we're testing more people, we're finding more and more people who are negative. And so that's the measure that we're using to see how well we're testing.
So follow up. So you're testing the people, only those that are symptomatic, and not just anybody that wants to be tested, right?
We started out with the very narrow criteria, looking at only people who were symptomatic or who were hospitalized and looked like they might have a corona-like illness, and people who were sick in nursing homes. We've broadened that out. Anyone who feels like they have are having symptoms that makes them concerned for the possibility of having this infection can be tested. And at these community events, when people come and want to be tested, even if they're not symptomatic, we are testing them.
Like, for example, if I want to be tested, or I have a friend of mine who just wants to get tested, how would you do it? I have no idea. And would they test somebody who says, hey, I'd just like to be tested? How's that work? I mean, I have no idea where to go.
We're asking people to go to their primary care provider and discuss that with them. That primary care provider could order such a test for someone who, if they and the patient felt that it was warranted.
Okay, so the standard is you go somewhere, emergency room, or to a doctor, a provider, some kind of professional, and say, hey, I want to be tested, then that person could make arrangements for you to be tested. But there's no place I could just walk in and say, hey, I'd like to be tested just for the heck of it. You can't do that. Is that right?
That's correct. You can't do the latter, but you can talk to a provider about your reasons why you want to be tested, and they can discuss the pros and cons of it, and they have the capability of ordering such a test.
I am misunderstanding. I thought that you had community testing events with photos and everything where people could just walk up and get a test.
That's true, Janet. This is
okay.
Centera did events in Hampton News where people could come in and get tests done. I had one done at one of those events.
As I had mentioned on that slide on the community testing events, we are doing those particularly in underserved communities because of the fact that not everyone has a provider. So when I was saying you could go to a provider, I was assuming, of course, you have one. For those who don't have a provider, we've been trying to do these community testing events so that there's an opportunity for them to get tested.
Janet, I do have a question, though.
Okay. Senator Love.
Dr. Oliver, my concern with the community events is the ones that were done by Centera in Hampton and Newport News is that there was a lack of participation. And even though it was free testing, people simply didn't come. The numbers were very low. And I think part of the problem was that you had to call in and sign up for a time to actually go and get tested. And there was from my point of view, there was limited advertising. And so people really didn't know a lot about it until either the day before or the day of the actual event. So I think that, and there's also, I think, an underlying fear on the part of many in those communities about the test itself, which is one of the reasons I went was to show people that it wasn't that bad to actually get the test done. So I think that as we do these community events, at the very least, there needs to be a little bit more advertising. And Centera did a good job. We need to do a little bit more advertising, and it needs to be a bit more simple for people to actually sign up for it.
Thank you, Senator, for those comments, and thank you for going to the site to help encourage others to go. I would agree with you that we need to put more attention into advertising these events. I believe that our health equity work group, which is part of the emergency support team around COVID-19, is doing a lot more work these days with reaching out to faith leaders in these communities and other community leaders and partnering with them, because one of the things that I think can help encourage people to participate in the community testing events is having people they know, respect, and trust in their own community, encouraging them to participate. So with those sorts of measures, we hope to do exactly what you suggest, which is to get more people out to these community events. Madam Chair, should I go on?
Yes. I don't think there are any other questions, so yes, continue.
Madam Chair, could I just ask one quick question?
Sure.
Oh, sorry.
Yes.
Dr. Oliver, thank you for your kindness in the presentation. When you look at the aggregated numbers, they are of some interest on those that have tested positive, but they aren't very functional, right? So I'm wondering, for instance, I'm sitting in Campbell County, and since May 1st, we've had 13 cases, and it stayed at 13. When is it that we can maybe get to, and maybe it's with more staff, get to that time when we can get that number of active cases that actually tells us something that we can put into action? In other words, we can, as localities and otherwise, actually do something with, because having this historical, long-running high number is of some interest, and maybe it compares us to other states, but it's not actionable. Is there a plan, maybe with the contact tracers, which you'd certainly need to know the condition of these people with those guys, that we can actually get to a number that'll actually matter for our localities, maybe even to our health department? How many people in Lynchburg, how many in Campbell and Bedford actually have the virus, as opposed to this multi-month running continuum?
Thank you for that. Yes. So from the point of view of public health science, or what we would call epidemiology, what you're asking about is, can we find out the actual prevalence of the disease? How many people actually have the virus or have had the virus? We're looking at a couple ways of doing that. There's not enough testing to go out and test everybody to find out. And even if we did that, that would be a particular point in time. When you do the PCR test, it's a test to see whether or not you have virus in your body at that point in time. The importance of the serology test, the blood test, is that it can find out who has been exposed to that and to the virus in the past, and it may be very useful in looking at the prevalence of the disease. So we're working in partnership with the University of Virginia to do one of these prevalence studies. We won't be able to do, obviously, the entire population, but there's a way to sample the population across various regions in the state and come up with a very good estimate of the actual prevalence of the disease, or rather infection with the virus across the state. So that's part of one of the things we plan on doing forward.
Madam Chair, this is Jennifer McClellan again. Let me try my question again. I got disconnected.
Oh, okay.
Thank you.
You're up.
As of at least a couple of weeks ago, I had heard concerns from primary care providers who are not affiliated with a hospital system that they were having difficulty getting tests. And so it's a two-part question. One, what is the mechanism for distributing tests to those providers? And two, have they started getting access to the tests more than they were at least a couple of weeks ago?
Thank you for that question, Senator. The tests, kits can be obtained by ordering from private labs, commercial labs, or through online services such as Amazon. Both of those means of obtaining access for private practitioners has proved difficult. We've been in discussions with the various professional organizations of physicians and nurse practitioners to try to find ways to increase the supply of both testing kits and personal protective equipment for clinicians so that they can obtain specimens from their patients and send them in. And we're actively trying to work out ways of increasing that supply to them. It is a challenge, but we're aware of it and we're working on it with the clinicians and their organizations.
Are there any other questions on the testing part? Okay, then I guess you can go on to the contact tracing, Doctor.
Thank you, Madam Chair. Contact tracing, or another way to think of it, is exposure identification and notification, is going to be really critical as we move forward in our plan to reopen the Commonwealth. As we reopen the Commonwealth, we can expect that as we interact more, there will be an opportunity for the virus to infect others. We have not, because the majority of us have not had the disease or been infected with the virus yet. So we have a strategy of containing any uptick in infections and boxing those infections in so that they do not spread to other people. And our goal is to, within 24 hours, be sure that all persons who are suspected to have had significant contact with someone who is COVID-19 positive is interviewed, monitored, tested as appropriate, isolated if they're ill, quarantined if they're not ill, if they're asymptomatic, and in both isolation and quarantine, make sure that they get the support services that they need so they can stay in that isolation or quarantine. If we go to the next slide, it lays out what we plan to do with this containment strategy. This is built upon what the local health departments do every day in our regular work. Contact tracing is something we do around sexually illnesses, tuberculosis, and what we did with the advent of the COVID-19 pandemic was to ramp up our already existing contact tracing capabilities. We increased our staff, and we have about 305 FTEs that are currently working on this. We feel we need an additional 200 case investigators and about 1,000 contact tracers, which would bring us up to around 1,800 people working just on this aspect of the work. This number is a number that we came up with based on the roadmap to resilience report that came out of Harvard around what the appropriate response should be to the pandemic. It would mean that we would have 15 contact tracers per 100,000 population. As Secretary Lane mentioned, allow us to ramp up and ramp down based on the numbers of cases that we are dealing with. If we go to the next slide, that we're going to be talking about the long-term care facilities. Madam Chair, do you want me to go on, or do you want to take questions on contact?
Yeah, let's see if there are any questions on the contact. Okay, I have one, and it's on your slide that's box it in. The isolate concerns me because so many people in Virginia, even here in wealthy Reston, can't possibly isolate. That their living quarters aren't large enough. There are more people living, together. Are we looking at any way to actually put people in hotels or help them isolate?
The CDC and VDH have put out some guidelines and recommendations on how to isolate in one's home. As you point out, this is not always achievable, and I think it depends on the resources and the number of cases, frankly, whether or not you could augment that with hoteling of patients. We've done that in some situations early on in the pandemic. We had arrangements with hotels for doing some of this isolation. On the Eastern Shore, the poultry plants provided hoteling for workers who were positive and symptomatic and needed isolation. So in particular situations, we have sought to do that.
Okay, thank you. Any other questions on that segment? Okay. Long-term care.
Madam Chair?
Yes, I think that's Adam.
Yeah, it's Adam Eben. You were talking about how you're trying to isolate, how it's being offered, but is anyone really taking advantage of it? I understand in my locality, Alexandria, they were offering isolation, but no one has taken advantage of it. Do we know if that's happening really anywhere? I know it's available, but...
I know it's been taken advantage of in the Eastern Shore. It's not. You raise a very valid point. People don't necessarily want to leave their families and be separate, staying in a hotel for 14 days away from their family. And in that situation, we've provided them with guidance on how they can isolate within the home. So. I don't have any. I don't have numbers to quantify that. How many have taken us up on the offers of hoteling versus those who have not?
Okay, thank you. And Madam Chair, just a really quick comment. A lot of or some of the people who are on the frontline workers who might need to isolate are not necessarily ones who are from the U.S. originally. Mm-hmm. Don't all take kindly to the government suggesting that they live somewhere else or follow their direction as to where they should be, take it with some suspicion. So that's just one consideration that people may be aware of.
Thank you.
Thank you. Madam Chair, this is Dave Marsden.
Yes, Dave.
Quick question. A number of states have already announced who their contractor or consultant is going to be to run their tracking system, what apps and IT tools they're going to use, and what kind of a data management system. I think we're in the process of making those selections at this point in time. Do you have a timeline on when we're likely to have that in place so that these folks who are being hired to be the tracers will have the proper tools and we'll have the appropriate ability to deal with the data that they transmit to us?
Thank you, Senator. The contact tracing management system that we're using is called Sarah Alert. It's highly recommended by the CDC and is used in a number of other states, and that's the way in which we'll be managing the database and so on of all this contact tracing. We are in negotiations and discussions with several other IT firms and others around other software that would be used in our contact tracing. We have a symptom checker software that we will be launching in the next day or so that will be part of this effort. We originally had discussions with several consulting firms about helping us out on the contact tracing, managing some of this for us. As it turned out, they were proposing doing essentially the establishment of call centers to do the contact tracing. We already have a call center centrally, and we have about 20 call centers around the Commonwealth. We didn't feel that we really needed that kind of help on the call centers, and on top of it, we felt that we really needed a blended model. Many of the more at-risk communities would be communities that wouldn't be as readily accessible through just phone calling. We wanted to have boots on the ground, people who would be able to talk to these folks one-on-one as necessary, and we will also be using the call centers. We have utilized our own contacts through employment agencies. We have about 12 agencies that we've contracted with to get the applications. We now have more than 6,000 applications that we are in the process of vetting. We've hired most of the supervisors for the contact tracers, and over the next several weeks, we plan on training and onboarding a couple hundred each week of the contact tracers. So I think we're moving apace, and thanks to support from you all at the General Assembly and the work of Secretary Lane and his staff with stimulus funding and other things, we have the resources we need to make this happen.
Thank you.
Okay, I think you can move on.
Okay, thank you, Madam Chair. Long-term care facilities have been where the majority of our outbreaks of COVID-19 have occurred. We've had about 2,847 outbreak-associated cases in nursing homes and assisted living facilities. And what this slide shows is a breakdown of those cases and deaths between nursing homes, assisted facilities. That category, that bottom bar of other long-term care facilities, comprises multi-care, group homes, and residential behavioral health clinics. About 13% of our cases are in these long-term care facilities. However, this is a very, very fragile population that's at high risk for morbidity and mortality from COVID-19. So while they are 13% of our cases, they account for about 59% of our deaths. And it's a reason why we are very focused on these long-term care facilities. If you go to the next slide, just to give you some framework of how we are looking at the long-term care facilities. Nursing homes and skilled nursing facilities are facilities over which the Virginia Department of Health has regulatory oversight through our Office of Licensure and Certification. These facilities, which are about 267 of them in the Commonwealth, all but 9 of those facilities are federally certified by Centers for Medicaid and Medicare Services. DMAS provides payments to these facilities for their Medicaid-eligible residents. The assisted living facilities, which there's far more of them, 500 plus, these facilities are regulated by the Department of Social Services. They are not certified by the federal government, and they do not receive payments from DMAS. And as a result, you will find very great variation in the amount of resources that assisted living facility has at its disposal. Some assisted living facilities are very high-end. Others are having great challenges in maintaining their operations. Some of these assisted living facilities receive payments from DARS through an auxiliary grant for residents. On the next slide, I want to talk a bit about the long-term care facilities task force that was established by Governor Northam. In response to the crises that we were seeing in the long-term care facilities, Governor Northam established this task force on April 10th. The task force meets weekly and will continue to do so indefinitely to discuss gaps in best practices in testing, staffing, infection control, personal protective equipment, transitions of care, financing, and communications for both the nursing homes and assisted living facilities. The task force is a broad group, as you can see here. It's got more than 125 members, and it includes all of these various agencies and associations as members. If you go to the next slide, it is a graphic that shows the areas of focus for the long-term care facility task force. And you can see that these areas of focus are also there are also working groups that are specifically assigned to take up and address these issues. On our next slide, I want to talk about a number of actions that have been taken to support the long-term care facilities. Again, I want to thank you and other members of the General Assembly for the increase in Medicaid payments to the nursing homes. You approved an increase of $20 per resident per day of Medicaid payments for the nursing facilities, and this helped in addressing issues like obtaining PPE and addressing staffing challenges. The Secretary of Health and Human Resources waived a number of state regulations to provide flexibility in staffing. The idea here was obviously not to decrease the quality of care in these homes, but to reduce some paperwork and other less important things so that the staff could spend more time dealing with infection control, dealing with cohorting really ill patients in a way so that they wouldn't spread the infection to others and those sorts of things. In partnership with the Virginia National Guard, we did a number of these point prevalence surveys, as I said, and we're planning on doing. We have a prioritized list of about 100 facilities that we're going to do. And the health department published a playbook or a reference guide for facilities to support their efforts at requesting staffing support, securing testing supplies, and other things. On the next slide are just some other steps that we've taken to help support the long-term care facilities, which you can read on your own. Basically, it's providing help with some staffing, getting help from local hospitals to help them with staffing, infection control, testing. On the next slide, I wanted to highlight some of the particular challenges that long-term care facilities are facing. The biggest challenge is sustainable staffing. In good times, long-term care facilities have a challenge in maintaining, recruiting and maintaining qualified staff. This has been exacerbated by the outbreaks, which also impact their existing staff and reduce it even more. PPE remains a challenge for many facilities, and we are working diligently to try to provide more more of the PPE for these facilities. On the next slide, I'll just say very briefly, for sake of time, that as you know, we've had an outbreak in the Eastern Shore. It's been centered at the 2 poultry plants there. The workers in these plants are at high risk. They are predominantly Black or African American, as well as Latinx workers, is a number of immigrants. This is a population that has high disease burden in general, and the nature of meat processing is such that you work in very close proximity to one another, and a highly infectious disease like the virus that causes COVID-19 can spread quickly in that environment, and that's exactly what we saw. If you go to the next slide, what you can see there is with the bars, it's the number of new cases by specimen collection date. The blue bars are the tests that were done in the community surrounding these 2 plants. The orange bar is an outbreak that occurred at a long-term care nursing home nearby. The gray bar is one of the poultry plants, and the yellow bar is the other poultry plant. The red line shows the number of beds that would be available if the cases of COVID-19 that developed and needed hospitalization had been placed in the local hospital there, Riverside Riverside Shore Memorial. The decision was made early on not to do that because, as you can see, they would have been overwhelmed with their 44 beds. So instead, those patients were transferred to Riverside Medical Center in Newport News. I'll stop there and see if there's any questions regarding the long-term care facilities, and then we can end with a quick bit on the funding.
Good. Are there questions? Okay, let's go on to the funding then.
Thank you, Madam Chair. Secretary Lane has discussed with you how the administration plans on using stimulus funds monies to support our response to the COVID-19 pandemic, so I won't go over that. Instead, I'll talk a little bit about some of the other funding, grant funding that we've received to support this. There are some federal funds that, like the ones depicted on this slide, they have very narrow and specific purposes, like the Child Nutrition and Ryan White funds. The CARE Act Provider Relief Funds are funds that have to be spent in the local health department. So these are all very restricted, but we've been able to utilize them in this pandemic to really help. If we go to the next slide, the Virginia Hospital Preparedness Program is a grant resource that we've used over the years to support our regional healthcare coalitions, EMS, and other sort of emergency preparedness things that we work with the hospitals and others across the Commonwealth. One aspect, an important aspect of this funding is that we use it to help finance the special pathogen treatment centers at UVA and VCU health systems. So for Ebola and again now for COVID-19, these centers have been very helpful in our response. This is a pass-through that goes from us directly to those hospital systems. The Coronavirus State Hospital Improvement Program, this is money that comes from through the CARES Act. Our offices of health equity and the Office of Rural Health are the grant recipient. The subrecipient is the Virginia Hospital Research and Education Foundation. Through this funding source, we've been able to provide funds to 22 rural hospitals across the Commonwealth. And obviously, those are funds that are much needed for hospitals like Riverside Shore Memorial, for example, which are very strapped and trying to respond to the pandemic. In the next slide, there are two more sources that we've been using. The COVID-19 Public Health Crisis Response Funding of $13.6 million has been a primary funding source where many of the response efforts that we've mounted so far, both our surveillance and epidemiology work, helping with lab capacity, and community mitigation efforts. In addition, another funding source that we receive for our disease surveillance and investigation work is the Epidemiology and Laboratory Capacity Fund. This ELC fund is one that we receive through the CDC, and it has limited scope for usage generally, although there's a new funding opportunity through ELC that has broader scope of work for which we're applying for funds. This will be particularly important. Both the COVID-19 public health crisis response money and the prior ELC monies are, as I said, a little bit more limited in scope. And as Secretary Lane mentioned, the stimulus funds that we have end on December 30th. So these grants become particularly important in supplementing the work that we have to do going forward beyond the end of this calendar year. Madam Chair, with that, I'll then see if there's any other questions from members of the committee.
Good. Are there any questions? You've answered quite a few already. I'm not hearing any, so I want to thank you for this presentation. I remember when you presented to the Health and Human Services Subcommittee during the session, I can remember thinking this is an agency that's doing some important work, but mostly it's preparing for a crisis. And unfortunately, it has come, and you're responding, I think, quite well to it, and I appreciate your work.
Thank you very much, Madam Chair. We really appreciate the support that we've received from you, the members of your committee, and the rest of the GA in dealing with this crisis, and look forward to our continued partnership in dealing with it.
I think we'll be partners for quite a while. So thank you.
Thank you.
Next on the agenda is the status of the unemployment insurance program, and the commissioner of the Virginia Employment Commission, Ellen Marie Hess, is going to brief us on this.
Thank you, Madam Chairman. Thank you for having me here today, and being aware of the situation around employment. I want to first give you a high-level overview of the new federal programs, provide you a little information about claims and maybe some context for those claims, talk to you a little bit about the payments that have gone out so far, and we'll look at the impact on the trust fund and some of our statuses for the claims. Unemployment insurance is designed to provide a temporary partial wage replacement for workers who lose their jobs through no fault of their own. Regular unemployment benefits are funded through taxes on employers, which are paid directly into the unemployment trust fund. Next slide. Because of the magnitude of the impact of the COVID-19, Congress created 3 new programs in the CARES Act to work in conjunction with regular unemployment insurance. The first is Pandemic Unemployment Assistance. We call it PUA. It was created to assist the self-employed or gig workers. The second is Pandemic Emergency Unemployment Compensation, or PEUC. That provides up to 13 weeks of benefits to those who have exhausted regular UI. We also have the federal pandemic unemployment compensation, which provides the additional $600 a week for individuals receiving either regular UI or one of the newly created benefits. VEC began paying the FPUC, which is the additional $600 benefit, on April 10th, and PUA on April 19th. We're continuing to work on the federal emergency unemployment compensation. We expect to begin making payments under this program beginning in July. The next slide. So we put all of the claims that VEC has received since we started keeping these statistics on a graph. The statistics we started keeping in 1970. When you look at the graph, you'll see that there are some gray bars, and those represent the recessions throughout the years. And you can see spikes around 1982, around 2001, and then the spike at the 2008-2009 Great Recession. That final spike that really overshadows everything else on that graph is the payments that we made, or the claims that we received rather, in March of this year. And there really is nothing in our data that compares to that spike. Next slide. We wanted to provide you some maps. We created these maps just to see where the claims were. The first map, that's just before the impact of COVID. That's what 2.6% unemployment looks like. The next map are the initial claims that were filed during the week of April 6th. And the last map represents continued claims during the week of May 9th. And so you can see that the pain of the impact of COVID-19 is pretty much spread all across the Commonwealth. Next slide. This slide is looking at the total benefits that have been paid. UI is regular unemployment insurance. The FPAC, as I said, is the additional $600, and the PUA is the money that we've paid out to the gig workers and the self-employed. So since March 15th, we have paid over $2 billion to Virginians. Slide 6. These are the projected trust fund expenditures. By the end of this quarter, we project that we will pay just under $1.2 billion in benefits from the trust fund. The additional benefits over that, that gets us to $2 billion or more, the federal programs came with federal funding, and so those are how those benefits are being paid. By the end of the third quarter, we expect to have paid about $2 billion in benefits from our trust fund. The next slide. We expect the payment of benefits as a result of COVID-19 to have a significant impact on the trust fund. The VEC anticipates that we will need to borrow to pay benefits during the third quarter. If you remember, we borrowed during the Great Recession also, and unless Congress acts, these funds will have to be repaid by employers starting in the first quarter of 2021. And slide 8. We have received over 700,000 claims so far. Because the Federal CARES Act required a determination of ineligibility, folks had to file for regular UI before they were allowed to file for the PUA. We are at about 70% today. That slide has data from May 8th. So right now we are at a recipiency rate of about 70%. At the high during the Great Recession, we were at about 42.7%. And I think the reason why it's higher now is because we have the federal programs that have different eligibility requirements. But for regular unemployment insurance, Virginia has some of the most rigorous qualification laws in the country. And that's the presentation, and I can take questions.
Madam Chair, Tommy.
Yes, Tommy.
A couple of questions. Based upon your projections on the unemployment benefits that will be paid, that must be repaid in the first quarter of 2021 by employers, do you have any preliminary approximations of what you think the employers will have to pay, what their increases will be?
Madam Chair and Senator Norman, we have done some preliminary. I don't have that information here, but I can tell you it is going to be a significant impact if Congress does not act.
Are you, Madam Chair, are you in a position to share that information?
Madam Chair, Senator Norman, we'd be happy to share that information. Just accepting the fact that it would be projections.
Absolutely, I understand that. That would be fine. A secondary, do I understand that during this period of time that individuals who are drawing the unemployment, that their requirement to seek employment is suspended?
We were directed, Madam Chairman and Senator Norman, we were directed by the governor to amend our work search requirement, and the CARES Act itself had that flexibility in it. So we do not require folks who are receiving benefits to report a work search.
Madam Chair, a follow-up, please.
Of course.
How long will that suspension remain in place?
Madam Chair, Senator Norman, we're in conversation with the governor's office now, and particularly with his chief workforce advisor. I believe they are looking at a couple of things, the most important being economic activity that will drive folks getting out and looking for work. I will tell you that now that we have employers reopening, we have created a portal for them to report when they have, called their workers back if a worker refuses. So the VEC will know if a worker has refused. And at that point, it will be an issue of whether or not they had good cause to refuse to go back to work. But in conjunction with that, we are looking at economic activity, and we'll take guidance from the governor's office as to when we put the full work search requirements back on.
Madam Chair, moving in just a little bit different direction on my last question.
Okay.
As I understand it, between the state unemployment and what the feds have done, that we have individuals who are drawing unemployment plus $600 a week. I have been, with my attorney hat on, have been contacted by a number of smaller employers who are staging or phasing the callback of their employees to work, and they are expressing a reticence to return to work because between drawing unemployment and the $600 a week, they are making more staying at home not working than they are if they come to work. And so the employer's getting the pushback in when he mentions about their responsibility to come to work. the explanation is, well, we are still concerned because of the pandemic situation about returning to work. Are you seeing any of that, or am I just in a very unusual situation?
Madam Chairman, Senator Norman, we've heard that anecdotally, and that's one of the reasons why we have the portal up that employers can notify us. We are doing communications around the fact that we have that portal up so that employers will know that they can report that they have called their employees back. If somebody refuses work, they're not necessarily entitled to unemployment. They'd have to have good cause for failing to report, and just being concerned would not necessarily provide that good cause.
Madam Chair, can I ask a follow-up question to that?
Yes, Senator McClellan.
So I have heard some conflicting information about whether lack of child care would be adequate cause for someone to refuse going back to work, and then if in that situation they would be able to continue receiving unemployment. Could you tell us what the answer to that is?
Madam Chairman and Senator McClellan, the guidance that we have been given around that particular question is that while the school year is still while the school year would be in session had not been for COVID-19, that is a reason for remaining on unemployment. But once the school year ends, then child care will no longer be a reason to stay on unemployment.
Is there another question?
Madam Chair, this is Steve. Just one quick one, and that is that I know that VEC's computer systems and everything have just been overwhelmed, but it is maybe the one agency where there's a little bit of a tough time getting a response when you have a constituent question. Is there a better way, given your tremendous workload, that we can interact with you guys to make sure if we have these individual questions from either employers or employees, that we can kind of work our way through that process?
Madam Chairman, Senator Newman, we're actually setting up a constituent services email here in the Commissioner's office. We've staffed that position, and we'll get that information out to you all as soon as it's up and running. And it's just a matter of getting the email set up.
Madam Chair, if I could, just maybe we can follow up offline just to make sure that there's a pathway so that legislators and aides can get more of the answers. So here again, I know you're just inundated. You've never seen anything like this, and your system wasn't set up for this. But making sure that we can at least get answers back is pretty helpful.
We'd be happy to do that.
Are there any other questions? Okay. Well, thank you so much.
I'm sorry, Madam Chair. I do have one more. Okay. The Commissioner may not be able to answer, but I think is important to have answered in light of her question about schools and child care. It is my understanding that there will not be the same number of summer camps, and as a matter of fact, a lot of summer camp providers are looking for guidance on how to operate safely from the Commonwealth. So I hope that is being factored into any decisions about no unemployment compensation for lack of child care in the summer, because I'm not sure the issue is going to get any better as far as the availability for child care for particularly 5 to 11-year-olds.
Madam Chairwoman, Senator McClellan, the guidance about the end of the school year is as much as we have been given so far. We can follow up with USDOL to see if Virginia not being the only state that's going to face this, to see if they have any further guidance, and if so, we will get that communicated out.
Thank you.
Thank you. Okay, anyone else?
Madam Chair, I just want to thank you. This has been very, very helpful.
Oh, good, thanks. I think I want to thank you, Commissioner. This was very helpful. I know you all were totally slammed, and somehow you're getting through it. And it's a very confusing time for our constituents, and I'm sure all of us have heard from many, but the experience of my office has been when they've called into to your office, we are able to break through things and get stuff accomplished for our constituents. So I really appreciate it.
Well, thank you very much, and I will pass that on to the folks here, Madam Chair. These are some of the most selfless and dedicated public servants I've ever worked around, and they look upon the folks that are calling here as their fellow Virginians, and they're doing everything they can to try to help them and assist them get the benefits that they need.
That's a great attitude. A great attitude. Thank you. That completes our agenda. We will be again meeting in June virtually, and I hope everybody stays well. You will be getting, members of Finance and Appropriations, you will be getting a work plan quite soon, outlining what the various subcommittees will be doing over between now and the session. So look for that. Each subcommittee will be meeting once or several times, depending on the topic. So thank you all. And this was a long meeting, but I think we got a lot of information. So I want to thank the presenters.
Well worth the time.
Good.
Madam Chair.
Yes.
Madam Chair, thanks for a great meeting. Do we know what the June meeting date is?
April, what's the June meeting date?
Madam Chair, the memo went out previously, but I believe it's June 23rd. Or, hold on one second. I can confirm that for you. June 23rd at 9:30 a.m. And we are, like the chair mentioned, we are planning to do that virtually. I will just say that we'll get the information that was requested in the questions. We'll make sure the staff helps get that information, and we'll send it out to all the committee members when we get those answers to those questions. And also, if anybody has follow-up questions on the background materials that we sent as well, please let us know, and we'd be happy to follow up. Thank you, Madam Chair.
Thank you.
Janet, thank you very much, and thank the finance team for an excellent presentation.
Yeah, you're always the best.
Thank you. Janet, April, thank you.
Thank you.
Thank you all so much.